Welcome back, everyone. This is another installment of the 4-hour and 15-minute strategy series, where I show you real trades that either myself or other community members have executed using the exact strategy taught here for free on YouTube. In this video, I'm going to break down a recent trade that I took on NZD USD, resulting in a total profit of over 12R. So let's dive right into it. So I'd like to start off this video by giving you all a little sneak peek inside of our Discord community, where I actually shared this entire trade to all our members. So it all started back on June 16th, and the day started out by me missing a really clean setup on USD JPY, which also utilized the 4-hour and 15-minute strategy. Very clean, but I just happened to miss it. Now, shortly after that, this NZD USD opportunity came about, and as you can see, I shared screenshots and my thoughts on that trade. Now, as the trade progressed, I realized there was a scale-in opportunity. I also shared that with the community members, so everybody had a chance to get involved if they wanted to. And again, as the trade progressed, I just kept making updates to the community. Nothing too crazy, just easy to follow along with. Just little updates as the trade went along. And eventually it hit full take profit on both positions for a total of 12.09R, which I also shared with the community here. So this is a good example of what I provide in terms of my daily and weekly analysis. I don't always trade. I usually trade like 1 or 2 times a week, but I do share that with the community in as much detail as I can. This is a good insight to what the community provides. And if you'd like to join us, just click the link in the description of this video. Now let's dive into the TradingView charts and we'll go over the exact reasoning behind this trade. So here we have the TradingView chart on the 15-minute time frame for NZD USD. As you can see, I have all my markups here. I'm not going to bother going through replay mode. It's just going to take way too much time. So let's just break down the reasoning behind this trade and the reasoning behind all of these markups here. It may seem overwhelming at first, but I assure you I'm going to break it down one by one. So first of all, the way this strategy starts, as you should know by now, is the 4-hour time frame. So we go to the 4-hour time frame and we locate our point of interest. Now in this case, my point of interest was this bullish order block right here. Sorry, this bearish order block right here. It was clearly responsible for clearing all the liquidity beneath these lows and obviously breaking structure to the downside very impulsively. It left behind this huge imbalance, and as price came up to correct that imbalance, tapped into that order block, then it's time for me to drop down to the 15-minute time frame and wait for that structural confirmation to know that it's safe to get involved in a trade. So with that being said, we can now take a look at the 15-minute order flow and see why I was comfortable to get involved with this trade. So first things first, as soon as price taps into the 4-hour zone up here, I'm looking for that liquidity grab. And that's exactly what we see here. Not once, but twice, okay? Now the reason I call it a liquidity grab is because there was no candle bodies that broke above this first high right here. So as you can see, if you look to the right, the arrow is pointing right where the liquidity grab occurred. There's no candle bodies breaking above it. It's just a little pierced through with this wick, and then it trades back down to the downside. Now, it didn't quite break this low down here either. That's also basically a liquidity grab because no candle bodies closed below that low either. We come up once more, and once again, no candle bodies closed above this high, just these 2 wicks right here. So another liquidity grab. Now we break to the downside again, and at this point, I was comfortable enough to just enter short because the recent move to the downside here created imbalance. Let me just highlight that for you all. So from this candle to this candle right here, we had imbalance, and it broke to the downside, created more imbalance here, but that was corrected pretty quickly. Again, no candle bodies closed below this low, but at this point I just wanted to get involved in the trade. It met all my criteria. I was comfortable taking it, and the most important part to me was this gap right here, this imbalance between the candles. And this was also a very clear order block for me. I like my order block formation to be the typical bearish or bullish engulfing pattern when it comes to candlestick patterns. So that represents to me a very clear order block. So I was happy with this. Liquidity was purged 2 times in a row. So I was comfortable getting involved. We had a really nice reaction from this 15-minute candle right here, pushed to the downside a little bit, but started consolidating, came back up to the entry. And then from that point, we really pushed to the downside, creating a true break of structure. Now, once that break of structure was occurred, I knew that there would be a scale-in opportunity. Again, we had an engulfing formation here, which represents to me a really clean order block. But the most important part is not just the engulfing pattern, it's the imbalance that was created beneath it, okay? Let me hide this position for now, just so we can clean this up. So as soon as that break of structure occurred, That's not necessarily enough for me to get involved in a trade. I need to see that imbalance, which we can clearly see right in between those 3 candles right there. That is enough reason for me to believe that price is going to draw back towards that area and mitigate this 15-minute candle before continuing its intended direction. I got involved in another scale-in opportunity here. As you can see, this position right here represents that. So it was a beautiful entry right away, like a sniper accurate entry, and traded away from it into about 2R profit or something like that. However, it did come back up to my entry, traded back into this 15-minute zone right here. It never actually violated it. I guess the wick pierced above it maybe like half a pip or so, but nothing significant to me. I held the position. My stop loss was placed at a point of invalidation, which was well above this recent high here, and more so into the highs of the first zone that was created. So I felt as though my stop loss was safe. I didn't interfere with the trade parameters whatsoever. I just set it and let it be. Wanted to see how it played out. Now, after that little test right here, we really pushed to the downside once more, creating yet another break of structure. Now, what did we just go over with the previous break of structure? We're not just looking for a structural break to the downside. We're looking for other things that go along with it, such as a clean order block as well as imbalance. So this was the candle that I identified as my order block that I would like to get involved in. I didn't actually scale into this trade again. I felt that 2 positions was enough. So I didn't get involved in the third, but I placed it here just to show the availability, right? There was opportunity to get involved. So we have clear imbalance between these 3 candles here. High likelihood that price is going to trade back up into that imbalance and fill it. And once that occurred, we actually tapped into this 15-minute candle right here, wicked into it beautifully, and then made a huge impulsive move to the downside. Now, from that point on, I think price had enough fuel to complete its move to the downside towards the next major draw on liquidity, which would be this 15-minute zone down here. I'll explain that a little later. But yeah, after that big impulsive move, we never saw a retracement back into these levels. So this imbalance was actually never corrected. So like I said, I think at this point we had built up enough liquidity, given price enough fuel to go in its intended direction. So we just took off to the downside without retracing and mitigating another order block. So let me zoom out a little bit and I will add that position back in. So yeah, these were the 2 positions. Now let's talk about my target, right? My take profit, the reason why I set both of these positions to this zone down here. So let me explain that. So similar to what we were just talking about with all of these breaks of structure, we look for imbalance. That's one of my #1 confluences when it comes to trading. I'm looking for big gaps in price between candlesticks, because that tells me that there's inefficient price action and price is going to be drawn towards those areas to correct that. So what do we see here within this huge bullish move to the upside that led us into that 4-hour point of interest? Well, we can see significant imbalance throughout almost all of these large body bullish candles. Significant imbalance, right? So as soon as price tapped into this 4-hour point of interest and started creating that bearish structure and order flow to the downside, yes, I was able to get involved in short positions, but you can't just ride the wave forever, right? You need to have an educated understanding of where price may go to next. So without being too bold, right? I wanted to be a bit more modest on this. I'm not shooting for 20R, 30R, 40R, etc. I wanted to target the path of least resistance, basically, or the lowest hanging fruit, as some would say. So that to me would be this 15-minute zone here. I look at this bearish candle here as an order block because it created a massive break of structure to the upside, broke all of these highs, cleared all the buy side liquidity resting above these highs, and left behind significant imbalance, very significant imbalance. So that to me would be a draw for price to trade towards, right? And that's exactly what it did. Now, as you can see, as the 2 take profits here were hit, we traded into that 15-minute zone and actually did get a decent reaction from it. We traded back up to the upside quite a bit. However, the bearish order flow remains intact. It turns out we were just filling this imbalance here just to trade to the downside once more. And so that's okay. I look at this and I say to myself, well, I could have targeted more, but that's a very unhealthy way to think. And I don't recommend anybody thinks that way, because it's better to just get in and get out, especially if there's a significant area in price where there could be a reaction from. I did see this as a potential reaction point, so I felt that it was safe to put my take profit there. Now, with that being said, let's go back to the 4-hour time frame, because technically speaking, if we're continuing this bearish trend, right? Like look at the overall trend here. Volume is clearly to the downside. Momentum is clearly to the downside. We have these huge drops, these huge bearish moves, and then small corrections in between. So after this huge drop to the downside, we had a correction back up to the upside, mitigated this 4-hour zone, and now it seems as though we're taking course down to the downside once more. So theoretically, there's nothing stopping price from reaching these lows all the way down here, right? So if you were a true swing trader, you could hold these positions all the way down to here for 250 pips or so. Me, myself, I'm still developing the patience to be a true swing trader. It's definitely a goal of mine in the future, and I'm working towards that actively. But for now, I'm more comfortable holding trades for like the 1 to 3 day range. That's why I set more short-term take profits, such as this 15-minute zone here. Any of these zones within here on the 4-hour or 15-minute time frame could have been valid to target, but it just requires more patience to be able to hold for that long. Holding through weekends and through major news events and stuff like that, that requires a lot of patience. So if you have that in you, all the power to you. I wish you nothing but the best. I'm actually working towards that. Like I said, I do prefer swing trading. But for now, it's nice to know that the 4-hour and 15-minute strategy provides both opportunities, right? And what I mean by that is that because we're basing our entire analysis, our entire trade idea off of the 4-hour time frame, you do have the possibility and the opportunity to swing trade. You can hold trades for a month if you want to, because we're getting involved with that higher time frame order flow. We have an understanding of the overall perspective of this market that we're trading. But the fact that we can get involved on the 15-minute time frame allows us to see short-term opportunities as well. So instead of swing trading this, I was able to get involved with reasonably pretty good accuracy on both of these positions. And I targeted a short-term level, which was this 15-minute zone down here. And that allowed me to take 2 separate trades here, one just under 7R and one just above 5R. Both of those together, it was approximately 12R. So that's fantastic, especially for only holding it for like 3 days, I believe it was. So I hope that provides some insight. I know I rambled a bit there, but I just want to provide as much value and perspective as I can on this specific trading strategy. This is the main way that I trade right now. I am working on refining my swing trading methodology, but this is my bread and butter for now. And like I said at the beginning of the video, guys, I shared this trade to my Discord community. So if you would like to get inside of the Discord community, see my trades in real time, not as a signal room, but an educational experience, I recommend that you go to the description of this video and click the link and follow the instructions. It's pretty straightforward. So I hope you all enjoyed this video. Thank you very much for watching. If you did gain some value from this, then hit the like button, hit the subscribe button, and I will see you in the next video.